because our markets seem to be shrugging off any kind of weakness from global markets or from macro cues that might be building out, which might be slightly sluggish as well or skittish for our markets. Because keep in mind that the global developments, nothing alarming as yet, but at the margin, starting to look a bit uncomfortable. Now, why do I say this? Let's first take stock of the global news flow in the session today. US markets were okay. In fact, the S&P 500 and the Nasdaq actually rose in trade, which is a positive. But there are two things that have happened. One, crude prices have risen more than 2% and have topped $83 a barrel. And Brent is actually above $86 a barrel. So that's the first point. The second point being that treasuries have fallen and yields are now about 4.45. So in some sense, there are at the margin some worries developing for sure. With the valuations and the run-up that we've had, should we just be a bit careful? Maybe so. Other developments, it's a free run now for Donald Trump to the elections because the court verdict yesterday effectively grants him immunity from any kind of measures or cases until the election is over. So therefore, we know that Donald Trump is going to the elections for sure. Other news, South Korean inflation has cooled more than expected towards the target. And the reason why this is important is because while the US inflation stays doggedly higher, I think a clutch of other markets are seeing inflation numbers turning a bit benign, and that might also be construed a bit positively. There is other development, of course, from an Indian perspective. GST collections are very likely in June at about 1.74 lakh crores. So that piece looks okay too from a market's perspective. So what did the US markets do? Like I said, the S&P 500 and the Nasdaq rose, but the Dow futures were a bit muted the last time we checked them. Yep, about 0.1% in the red. So the US markets did okay, but Dow futures quiet. Asia largely is doing okay, which is actually a very good sign as well, because most of the markets or indices that I saw were in the positive, and the GIFT Nifty or the implied open seems to suggest that we might have a start which is in the positive, about 43 odd points. So slightly above 2200 or 24,200 or knocking on the doors of 24,200. Now this is interesting. And why is this interesting? Because I think the trade setup, if you look at the trade setup, you will get to know why. One, of course, you seeing the long short ratio being substantially higher than what has been in the recent past. So we are above 83% on the long short side, which is the highest in a very long time. And that's been building out for a while now. So the FI positioning is clearly on the long side on the futures. But even when you look at the very near term triggers, yesterday, for example, the option writing at 24,200 was very, very hectic. And in fact, call writers stood out and they had a very large call writing position being done versus the put writers at 24,200. Now, why is this important? Because if we go above 24,200 and convincingly stay there, then the call writers might have to come in to cover their positions aggressively, because it's frankly become very difficult to call out tops in the market. At 24,000, a few people tried calling out a top, went up to 24,100. Now tops are being written at 24,200. What if the markets continue to way higher in the run-up to the budget, in the run-up to the first set of results that come in as well? So therefore, this becomes a very important thing. Not in terms of fresh OI written, 24,200 yesterday was a key strike from an option writer's perspective, and therefore something that you should keep an eye out for. Sectorally, while banks and IT did well, I think most people are saying that telecom is probably the most predictable index, and at all dips will get bought into. In fact, if you look at brokerage notes across the board, they are constructive on telecom. You speak to any buy-side fund manager, very constructive on telecom. And therefore, what we're seeing right now in a Vodafone or the tepid moves in Bharti, after the run-up that we've already seen, is a bit of profit booking that is coming in. I think this will get absorbed at some point of time, and you'll probably see some further buying emanating in telecom as well. Vodafone was down yesterday. Airtel started off positively yesterday. Can we just pull up yesterday's chart of Airtel? But ended very muted. So the point is, right now they are seeing some muted activity. The question is, will it last this way, or will they see some buying emanating very soon? My guess is the latter, but let's wait and watch. The other aspect is auto sales numbers, and they're a bit all over the place. The reason I say this is because it was expected, for example, Ashok Leyland will do very well. CV numbers are not looking good though. If you look at the CV numbers as they came out yesterday as well, there seems to be a bit of a prolonged weakness of sorts in truck volumes. It doesn't augur well for any of the CV players. Tata Motors, again, all over the place, not that great. And by the way, when you speak of auto volumes, the surprise came in from two-wheelers. I mean, Bajaj Auto was okay, Hero MotoCorp was out of the park. I'll come to that in a moment. So that's where that autos are throwing up a bit of a surprise. It'll be interesting to see what some of these stocks do in the session today. So I will keenly watch out for what a Hero MotoCorp does in the session today, what a Tata Motors and what an Ashok Leyland do in the session today. Ashok Leyland was duly punished yesterday when at about 240 or 250 the numbers came out. Thank you for pulling this graph. Let's just stick with this for a moment before we get to stocks. Look at the expectations thereof. Or these are the actual delivery. Okay, this is the actual delivery that came in. Hero MotoCorp up 15%, TVS Motors up 5%. But look at Tata Motors CV, 6.8% lower. Ashok Leyland yesterday had a downtick too on the CV business. So therefore, CV volumes are not coming out well, but two-wheeler volumes are coming out well. So that's the interesting piece that is happening in autos. But when I talk out stocks or sectors to watch, I can't not start with what could happen to broking stocks in the session today. Now we're going to spend some time here, viewers. What's happened in terms of stocks in news today? SEBI's asked exchanges and market infra institutions, which is MIIs, to charge members uniformly. Now, what used to happen is that some of these were getting discounts based on the trading volumes. Let's move this graphic. They were getting some discounts on trading volumes or activity, and now apparently MIs have been asked not to offer these discounts based on trading volumes or activity. The alert that I have for you when it comes to this topic is that it's possible that exchanges charge low fees to discount brokers on the volumes that were generated. Now this is important, viewers, and I'll tell you what. Angel Broking, for example, earned 400 crores from this activity in FY24. In FY24, 140 crore orders, increase of brokerage rate by 3 rupees. Was not done. So there was no brokerage rates that were increased, and they earned 400 crores from this. Now, I'll simplify this for you. If brokerages earn 100 rupees from their clients, based on volumes that they met, if they had to officially pay 90 rupees, by virtue of some discounts that came in, they had to pay only 85 or 80 or 75 as the case may be. So they used to earn 5, 10, 15 rupees as a discount, and that used to get added to the top line. Now, SEBI said, boss, nothing doing, this has to stop. And therefore, this is a hit. Like I said, one of the sales note that I've received, this is not official information, but one of the sales note that I've received says that Angel One earned about 400 crores from this particular aspect in FY24. Now, this is a big number because if you think of this, if 400 crores goes out from Angel One's top line in FY24, then what remains? I mean, yes, of course, it's still a large number, but for FY 2024, their sales on a consolidated basis were 4,272 crores. If they earn 400 crores, that's about 10% of their income, and that goes out. And therefore, I suspect that today, the likes of Angel One, the likes of 5 Paisa, maybe even IFL Sec or Motilal Oswal might all come under pressure. Remember, these stocks were under a bit of a cloud in yesterday's session too. Motilal Oswal was amongst the top losers on the BSE 500 in trade yesterday. Amongst the top losers, I mean. I think was down about 4% or 5% if I'm not wrong. 3.5%. Was down even more, forget the 12-month chart, but yesterday's session, it was down significantly in trade. 3.75%. I wonder if 5 Paisa also was down. So, you know, these stocks were under a bit of a cloud yesterday. I reckon that they could be in a bit of cloud today. So the same sales note that I've received also says that how can brokerages offset this? For example, Angel One, 140 crore order, and they say that if an increase by brokerage by 3 rupees can take care of the same, that an Angel One in the past had highlighted that they will not be hit if such a move comes. Can they go up and increase the brokerage rate by 3 rupees when they are competing versus some of the others? Remains to be seen. But I think that independent of what moves they take today, the stocks will start off lower. So that's the first set of stocks on my radar. Watch out for some of the broking stocks. Then Hero MotoCorp. I won't be surprised if Hero MotoCorp is not amongst the key gainers in the session today. What's happened is that Hero MotoCorp, the total sales are up 15% at 5.03 lakh units YOY. The domestic sales are up 16% at 4.91 lakh units YOY. This is a big surprise because yesterday, if you remember the table that I'd put up on the trade setup, it spoke about how the volumes from Hero MotoCorp are expected to see a decline both YOY and MOM. And I think that because they have not done that, this stock will probably see some smart moves on the upside in the session today. So watch out for Hero MotoCorp in trade as well. The third stock on my radar is NMDC. NMDC June production volume was down 3.2%. Sales volume was down 9%. Remember, yesterday, the company had cut product prices as well. So very likely that NMDC could actually see a bit of a downtick in the session today. That's the third stock on my radar. Some smaller stocks that you need to keep an eye out for. JTL Industries, Q1 sales volume was up about 10.8%. Kandhar Oil Refinery received a 3-year contract worth 375 crores from ADNOC. PCX Systems received orders worth 1,250 crores from Larsen & Toubro. So these are names that you got to watch out for in the session today as well. May see some positive reactions, all of these. South Indian Bank was okay. Gross advances were up about 11.4% and deposits were up about 8.4%. CASA ratio muted. Maybe not that great, but CSB Bank, I thought the numbers were good. Gross advances were up 17.8% at 25,000 crores. Deposits were up 22%. Looked okay. CSB Bank could well react positively today. So watch out for this one. Then some brokerage notes. Citi's come out with a note on IGL. They've raised the target price to 610 from 550. They said the target price has been raised primarily on reduction in the cost of capital assumptions because of a lower risk-free rate. The underlying operation and financial assumptions remain the same. So no changes in business. But because the cost of capital assumptions are lower, as a result of which the target price automatically moves at higher. Essentially, the discounting rate is lower. So the target price raised to 610 viewers from 550. The current price, 524. Watch out for IGL. Watch out for industrial stocks as well. UBS has come out with a note. They say they prefer CG Power and BEL over Larsen & Toubro. BEL won a large order yesterday, remember viewers? Or day before yesterday actually. But they reiterate the buy on Larsen & Toubro. The SOTP based target price is 4180. They say the near-term catalysts are limited for Larsen, but so are the expectations. And margins and execution are looking better for FY25 and 26 for Larsen. So watch out for this one. Watch out for V. Remember I was telling you about telcos being bought across by people and how people are constructive. Now Citi has been the most conservative on Vodafone or V. But they have come out and they have upgraded the stock from a neutral to a buy. The target price is now 23 rupees versus 15 rupees. Now why do they say this? They say they're enthused by the shift in stance by the market leader Jio towards monetization and peak competitive intensity behind. They say that the recent tariff hikes at the higher end of consensus estimates enthuse them. They believe the positive developments of the AGR case could actually lead to a bull case of 28 rupees for V. So therefore, that's the other one that you might want to watch out for in this session today. What else have I missed out? Moschip Semiconductors or Moschip. CDAC has partnered with Moschip and Socionex, so watch out for that stock as well. Government may raise windfall tax, so ONGC Reliance might come under a bit of news today. Anantraj Industries, DAM Capital has initiated a buy with a target price of 620, so I'll watch out for that as well. And Raymond, the 11th July demerger date is the record date, so that's the other one to keep an eye out for as well. So these are a few stocks that I certainly keep on my radar in the session today. Okay, I hope you found this useful. Remember, if you are interested in IT and tire stocks, both of which are active, at 9:45 we have a conversation with Manav Chopra of Nuvama, who's gone constructive on all of these as well. But for now, let me cut across to an exclusive chat that my colleague Samina is having with Jahangir Aziz of JP Morgan.
most of the inflation dynamics in the US right now remains, because goods inflation is basically flatlining at zero, is going to remain sticky and most likely for a prolonged period of time. So we are not looking for a very, very large, enthusiastic, deep, early rate cutting cycle. We are looking at a shallow rate cutting cycle that's get prolonged well into 2026.
Jahangir, just moving away very quickly from the US to what we've already seen in Europe, because that seems to be another bloc that's going through its own problems. ECB defied the US and moved with the rate cut in its last meet. What are your thoughts on that, and what do you think are the major risk factors for central banks globally?
So I think, our ECB basically had telegraphed that they were going to cut rates for 3 months back, right? So they had to cut rates. We expect one more rate cut in the remainder of the year. If you look at other central banks in Europe, the Swiss National Bank has cut rates. We are expecting the Bank of England to start rate cutting in August. But I think if you look at other developed market banks, I'm not talking about Bank of Japan, where the next move is going to be a rate hike, but all of them are pointing to this very shallow rate cutting cycle. This is not, even the Europeans are not enthusiastically cutting rates. The only people who had enthusiastically cut rates were the emerging markets in Latin America and in Central Europe, who had taken rates to astronomical highs back in 21 and in 22. But beyond them, almost all the rate cuts that we are looking at in terms of central banks are essentially much more shallow and prolonged rate cutting cycle, because the same dynamics holds, which is that goods inflation has come down, has brought down inflation from its high, but service inflation remains sticky, and it remains sticky almost in all of developed market world. In terms of the risks, I think the real risk is that, this very, very sticky inflation is going to make the rate cutting cycle very shallow. I don't think the benchmark for rate hikes is high in any of these developed market central banks. But I think that, for them to be able to cut rates deep enough, I think they really need to see, the service inflation, particularly, to be less sticky. And that, unfortunately, is, driven by very tight labor markets almost everywhere, and that seems to be the challenge at this point in time.
Right. Jahangir, let's move focus to Asia and emerging markets. With China's economy slowing, most people believe that India could be the fastest growing Asian economy. For good reason, right? Investments as a share of GDP in India is starting to rise. It seems like all stars are aligned for private capex also to start igniting. Do you feel like we are in a relatively better spot as compared to our peers?
So we are in a relatively better spot compared to our peers. The question is, which peers are you talking about? If you're comparing to Brazil and others, obviously we're in a much better spot, right? Look, China is clearly going through its troubles, and those troubles are pretty much China-made, much more than, driven by global factors, etc. But if you turn to India, I mean, look, we keep talking about private sector investment picking up. Private sector investment, gapped down back in 2000 and just after the GFC in 2012 to around 12% of GDP. It's gone up and it's gone down a bit every year, but it's just very minor volatility. It almost remains stagnant at 12% of GDP. So at this point in time, I think we need to sort of step back from looking at cyclical reason as to why private sector investment has essentially remained at 12% of GDP. It has gone through bad banking sector crisis, and then good banking sector situations after the cleanup in the banking sector. So that is also doesn't seem to be the reason as to why private sector investment has remained stuck at 12%. We really need to step back and ask ourselves, is this driven by structural factors? And rather than keep looking for cyclical reasons as to, well, tomorrow it's going to go up or it's gone down this quarter because of this and reason. We've gone through this for 12 straight years, 15 straight years. and I think the time has come for us to step back and say, what is structurally going on with the Indian private sector, that it just doesn't seem to be able to break that 12% of GDP barrier?
Right, Jahangir, and I want to take a cue from that because you do see the government very actively trying to boost exports, and a large chunk of it would, you'd imagine, come from the private sector and hence boost private capex. We aspire to be a global manufacturing powerhouse, but India's contribution to global merchandise exports still only stands at 2%. So from the sound of it, we may continue to play catch up for the next couple of years, if not longer, right? Do you feel like that takeoff in manufacturing is still in very early stages, and we may be looking at a significant growth in capex only maybe 3 to 5 years out?
So again, these predictions and forecasts are very hard to make, right? But even if you look at foreign direct investment, right? So if you take foreign direct investment and you break it down into services and manufacturing, then manufacturing-related foreign direct investment never really exceeded beyond $12 billion a year, even when overall FDI investment had reached, I think, about 75, if I remember correctly, in 2021. That was a high point. It was services-related. So I think this idea that FDI or that kind of using India as a manufacturing hub is going to break. It might happen. I'm not saying it won't happen. But so far, the evidence suggests that we've had a very steady, manufacturing FDI for a long period of time. That has, again, withstood all the cyclical volatility of the global economy, etc. Services FDI is the one that really soared, prior to 2021 and 2022, and since then it has actually fallen. So if you look at overall FDI, that also has fallen. Now, the thing is that, FDI across the world has fallen. It isn't that it is only India or China. And it's very hard to make the argument that you're going to get FDI-related manufacturing or services investment when cash is still paying you 5% back in the US. So I think that, for India to break that mold, I think you need the financial conditions globally to normalize. Back to more normal state of interest rates and the cost of funding. And it's only then we will be able to say whether or not we are going to get the kind of investments that we need to get India out of, boost manufacturing and whether it's exports of services or exports of goods. But right now, I think across the world, investment is being held back by the fact that cash is paying you 5%.
Well, that's, of course, the investment piece of it. How concerned, Jahangir, are you with consumption? It's another space that we're not seeing a significant pickup in. We've also looked at some numbers, and while household savings seems to be coming off, interestingly, while you'd imagine India is doing so well and the economy is booming and stock markets are raging, but that's not reflecting in actual cash and consumption in that sense. Is that something you're worried about at this stage? Do you feel like we should be talking about this a little bit more than just focusing on the good picture?
So you can, I don't know how much you should worry about it, but I don't think there is any puzzle as to why consumption hasn't broken 4% growth rate. I mean, that's really what seems to be everybody's sort of puzzle, quote unquote, that, well, growth is doing at 8%, why is consumption at 4%? Actually, if you look at nominal GDP in India, that grew at 9.5%. CPI, this is last year, CPI grew at 5.5%. So real incomes grew at 4%. Why would you expect consumption to be anything more than 4%? If you go back to the year previous to that, consumption grew exactly at the rate of real incomes. The year before that, exactly the same rate. So I think this is this disconnect between using real GDP as a sign of real incomes rather than actually calculating what the real income in India has been. So nominal GDP is nominal income, that grew at 9.5%. CPI inflation last year was 5.5%. I know I'm repeating myself like a broken record. 9.5%. So real income grew at 4%. Consumption grew at 4%. I don't see any puzzle there. The concern should be, why did real incomes grow only by 4%? But that's not where people are focusing.
So, Jahangir, help us understand that if real GDP and real income is only growing at 4%, what do you think needs to be done in order to push the anvil of that?
No, 1 second. Real GDP by CSO is growing at 8%.
Right.
CSO also publishes nominal GDP, which is growing at 9.5%. The government also publishes inflation numbers, which is 5.5%. So if I'm earning 9.5%, if my nominal income has grown by 9.5% as per CSO, the price of goods have gone up by 5.5%, then the real purchasing power has just gone up by 4%. The question that needs to be asked is, how can an economy whose nominal growth rate is 9.5% and whose CPI or domestic inflation is 5.5%, if I gave you those numbers, you wouldn't jump to the conclusion the real growth is 8%, would you? You would.
Well, back with India Market Open right here on NDTV Profit. just bring up the implied open for a moment to just show our viewers what is it that we are likely to see today. Maybe 40 or points. In fact, it's cooled off a little bit from the highs that it was at. So watch out for this. Watch out for banks and IT. Certainly pockets to monitor. But what is the derivative setup looking like? Agam joins in with that. Morning, Agam.
Morning, Niraj. Well, at the moment, things are looking certainly much, much better. Given the fact that Nifty yesterday once again closed at a new life high, of course, on a closing basis. And with that, we've seen more addition in open interest as well towards what looks like long. So an advance for about 0.5% for the underlying, about 3% added in open interest. The Bank Nifty as well continued to move upwards, holding on about the mark of 52,500. And of course, another 2.5% added in open interest there as well. Now, as far as the option market is concerned, we've seen a lot of traction in puts and more traction in puts as compared to calls yesterday, perhaps also on expected lines given the fact that the Nifty moved higher. And based on that, we are looking at more and more writing around the 24,000 put. This also means that perhaps, at least in the near term, traders are betting against the Nifty closing below that mark, at least as far as this week is concerned. And of course, on the higher end, we're now seeing a little bit more traction around 24,500. It's a roughly 500-point range that we're potentially expecting the Nifty to move within through the course of the next few days. But you never know how things can, in fact, change. Well, we move on and talk about the Fin Nifty as well, because that's where we have the weekly option expiry. Just take a look at where we have seen a little bit more put open interest, and that's around strikes of 23,500 and 23,600, and on the higher end 23,800 and thereabouts are a little more active. So that's a rough range that you can work with. But remember that Fin Nifty option premiums are usually very, very contracted, and hence selling becomes extremely challenging under those circumstances. That said, we're going to also keep an eye on a whole bunch of stocks. So we have longs in MGL, Oracle Financial Services, Deepak Nitride. All of them have moved sharply. Of course, Hero MotoCorp will also react to its June volumes, which came after market hours. And among other stocks which saw unwinding, about a short covering for Indus Tower, PVR, Inox, Coforge, along with UBL. So a lot of stocks out there to keep an eye on. But, with all the data that we have, the question really is, what do you do and how do you perhaps use options in such markets? Well, we have Amit Goel of Amit Ventures who's joining us on the show this morning. Amit, good morning. Thanks so much for joining in. Let's start off with your view on the benchmarks. I believe you also specifically have an option structure for the Bank Nifty. Can you take us through this?
Yeah. Good morning, Agam, and thank you for having me on your show. And very good morning to all your viewers. Talking about the benchmarks, we have been in a tearaway bull run now from the lows of what we had punched on the election day results. We have, in fact, broken out of a channel in which the Nifty and the Bank Nifty have been trading for a fair bit of time, for the last 6 months, in fact. And now we are trying to build a new trajectory. So given this backdrop and the positive news flows on all accounts, including the GST collections, and the PMI data and everything, I would suspect that I don't see any sharp correction in the near term, along with the options data, as you have rightly mentioned, that 24,000 happens to be a very strong support. I would rather look at buying on dips, and if Nifty does correct, and some of the early entrants take a little bit of profit booking, and Nifty corrects at around 23,900 or 24,000, we could look at building fresh longs for the next week. Having said that, I do have a specific structure for Bank Nifty. If you tell me, I can take you through that.
Please go on, Amit. Tell us about what you are doing with the Bank Nifty at the moment.
Yeah. So the view remains the same as with Nifty. I'm still bullish on Bank Nifty as well, though the structure in Bank Nifty is not all that strong as Nifty is, because Bank Nifty punched its all-time high 3 sessions back, whereas Nifty did that yesterday. Having said that, the overall bias still remains on the upside, and the structure that I want to suggest our traders, short-term traders, is this. We look at constructing a Bank Nifty bull collar ladder, which essentially entails a 3-leg strategy. The entry range and time for entering this trade would be post 9:30, so that we allow the markets to settle down a bit. And when the spot is within 52,450 to 52,650, if the spot ranges between these two numbers after 9:30 a.m. Today, we could look at entering a bull call ladder for tomorrow's expiry, wherein we buy the 52,500 call one lot, we sell the 53,000 call one lot, and we sell the 53,500 call one lot again. What this does is this minimizes the risk on the downside. So if there is any sharp profit booking between today and tomorrow, we limit our risk to about 2,000 rupees on this trade. Though this trade also exposes us to unlimited risk on the upside beyond 53,800, sorry. So what we could look to do is we could have a rupee stop loss and a rupee target, wherein if we anytime during the day or today or tomorrow, we end up making a 2,000 rupee profit, we could exit the trade. And on a lakh rupee margin, this gives us a cool 2% yield in 2 days time, with about, we'll keep our stop loss also at about 2,000 rupees on the downside.
Right. Okay. So just want to revise the conditions under which you actually enter this trade. Firstly, well, as Amit has mentioned, you're looking at a spot price of anywhere between 52,450 to 52,650. And under those circumstances, what you are actually looking to do, and remember, this is for tomorrow's, weekly options expiry. What you're looking to do is you are buying the 52,500 call, and against that, you're also selling the 53,000 call, along with that, the 53,500 call as well. And as, pardon me, Amit has put it, you're looking at a target of around 2,000, pardon me, and your rupee stop loss in this case is also 2,000, and your risk to reward, naturally, that this means that it's 1:1. However, if you do stand to make out 2,000 at this point in time, considering a margin of around 1 lakh rupees, you're making about 2% over the course of today and tomorrow. Amit, is there anything additional that you may like to add, or is this largely covers it up?
This largely covers it up, Gam, you've rightly said.
Okay, Amit, so let's move on and talk about L&T. I believe that one is also on your radar this morning.
Yeah, the structure in L&T happens to be that of non-directional. It's trading in a broad range, barring the the extreme movements during the election results and the exit poll days. We've seen L&T move in a very broad range of about 3,400 and 3,700 levels, and it is currently at around 3,500, 550 levels. It seems to be in the middle of that range. If you look at the other technical factors like ADX, like RSI, on a higher time frame basis, most of them are fairly neutral. Given the neutral stance on L&T and not much of news flow, barring that order announcement yesterday, there is not much action happening. And if you also notice that the result for L&T is around 23rd of July. So I don't see a lot of action happening in this counter during the next couple of weeks. So in order to take advantage of this, what we could do is we could set up a slightly aggressive short strangle in this counter, wherein we look to sell the 3,700 call. Along with that, we also sell the 3,400 put, one lot each of the monthly July monthly expiry. The rupee stop loss here we will maintain at 3,000 rupees, and we will also target about 3,000 rupees on this trade. Considering that this is a non-directional and an unlimited risk, any beginner traders who are not well versed with this kind of trades can stay away from it, and anybody who is well versed with it could look at entering this. There are some entry range and timings. I will obviously suggest to enter post 9:30, allowing the overall markets to settle down a bit from the opening levels. And if the spot ranges between 3,500 and 3,550, which is the midpoint of this range, we could look at entering this trade.
Okay, so a straightforward short strangle as far as L&T is concerned, and the strikes that which Amit has also mentioned at the moment, a little bit more aggressive. That's because the strikes are a tad bit closer to the spot. But Amit, I do have a follow-up question, and I want to revisit the Bank Nifty strategy that you've taken us through. When it comes to your sell legs, both of them are at different strikes. That is the 53,000 call and and the 53,500 call. One may perhaps question, why is it that you are not going ahead and selling the same strikes? Why is it that you're not selling 2 lots of the 53,000 call, or for that matter, 2 lots of the 53,500 call? And why are you actually distributing it across 2 strikes?
So since we know that Bank Nifty is slightly a little more aggressive counter, and it can move sharply, especially on expiry days, I want to be a little more comfortable with the range of the trade in which I am profitable. So instead of selling it with 2:1 kind of a trade, wherein we buy the 52,500 and sell 2 lots of 53 or 53,500, which basically is a ratio spread, I am looking at spreading out the range in which we are likely to collect some profits. That's one of the main reasons why I wanted to spread out the range in which I'm profitable and keep a little more buffer on the upside.
So, that's the reason why, of course, you actually are spreading it across 2 strikes and not necessarily keeping at 1 strike. Amit, on that note, taking a moment to thank you for joining us and taking us through these relatively complex and sophisticated structures, also simplifying them for our viewers, and, of course, helping us with that strategy on L&T as well. Well, with that, it's over to you, Niraj.
Thanks, Agam. Well, important option strategies for you to take benefits from. Now, speaking of options, and brokers have benefited from this in a while, but I think upon an update from the market regulator, not on options really, but SEBI's introduced guidelines for exchanges to ensure fair and transparent fee structures, which may potentially reduce costs for end clients such as investors and traders, but hit brokerages in a big way. Charu Singh Johnson for more on this. Charu, what is the latest update there?
So the Security and Exchange Board of India, upon examination, found that some of the exchanges, some of the members of these exchanges use a volume-based slab structure where the fees that they are charging the end clients, which are the investors and the traders, daily is much higher than what they are paying back to their market infrastructure institutions, that is the exchanges, on a monthly basis. That is why new fairness and equity-based guidelines have been introduced that are to be followed. Now, these can be seen majorly in 3 ways. Number one, that to ensure fairness, what is going to happen is that they have to ensure that volume-based system is going to be discredited and only a flat fee structure is going to be taken up, after which that volume and the size and the activity of the member is not going to be considered. It is going to be equal for all members. Then true to label is the second criteria, according to which the fees that is going to be charged by the exchanges is going to be the only fees that is charged on the traders and the investors by the members, no hidden or extra charges. And lastly, the current existing system of per unit charges is going to be considered so that a fair charge is, being levied on the end clients, which are the traders and investors, and they will also have to, potentially pay a lower fees. And finally, the market infrastructure institutions have to amend their rules and see if they have the infrastructure and the means of implementing it, and then report to the market regulator that they have implemented the same.
Yeah, this is important because it will possibly hit some of the discount brokerages for sure in a big way from a market listed perspective. But yes, Charu is right, brings down the cost presumably for end clients. Or maybe, Charu, just one quick follow-up, right? What may happen is essentially not that the brokerages may charge customers less. If anything, Angel Broking about 6-9 months ago had said that they will not get impacted because they can hike brokerage fees by 2-3 rupees in order to offset this loss of income. So it may not actually be a profit to the end client, but for now just a loss to the brokerage.
In a way, yes, it can be looked at in a way that it is a loss to the brokerage, and for the end clients it is just another thing which ensures that only a fair fee is charged on them.
Yeah, Okay, Charu, thanks for putting that into perspective. Now, Nirav Asher, Head of Equity Research at Latin Manharlal Securities, with us. Before we talk about everything else under the sun, Nirav, you represent a brokerage. You're probably not a discount broker, therefore you don't get impacted as much by this, by volume targets, etc. But tell us, how does this work? Did you benefit out? I mean, your brokerage also met some volume targets and therefore were you charged less? And is this therefore a hit? Because there are various estimates that I've read this morning which say that Angel Broking for Angel One, for example, earned maybe 400 crores. out of the 4,200 crore top line in FY24 from this piece alone, and that is at risk now.
Yeah, good morning and thank you for having me on your show. One thing I think, first things first, we are not a discount broker. So we offer a whole host of services and we charge the normal rates. That is point one. And regarding this this SEBI directive, which is applicable from October 1st, that market infrastructure institutions are supposed to charge a flat fee or uniform charges, which was benefiting certain discount brokers. Now, I think these new age discount brokers, they have a very aggressive strategy for growth. And to push the growth, I think they have been going in aggressively for volumes. And thus they've been availing of these discounts, which if discontinued, I think is likely to be passed on to the clients. Because we know that finally it is the end client who has to bear the brunt of this. And to our mind, this can potentially impact the volumes going forward. Because I think we've seen this surge in volumes, as you rightly pointed out regarding Angel. We've seen this surge in volumes. It's on the back of wafer thin margins, basically. So I would be tempted to believe that this will be passed on to the final clients. And in a way, this could potentially impact volumes going forward.
Okay, but so one is volumes, but could this reduce the YOY incremental incomes? Because if they don't get this money for 9 months now, presumably, then is that effectively killing growth on the revenue front for some of the discount brokers, Nirav? Because their valuations are tied squarely to the kind of growth that they are showing in clients and in business. So therefore, is it a hit that an Angel One or a 5 Paisa might take today? Would you use that hit to buy into those stocks or are you staying away right now?
We'd like to stay away from the stocks, at least at this point of time, because we need to study the potential impacts of this. But definitely it affects everyone across the chain, because when you are charging uniform charges, a flat fee structure, the volumes are going to be hit. So in that way, from that perspective, the business is going to be impacted. And as far as the end clients are concerned, for them also the cost structure tends to go up. So they would be definitely less aggressive as far as the trading, etc. is concerned. So I think it could potentially disrupt the industry in a few ways.
Right. We also have Rajat Bose with us for a word on the technicals of the market. Rajat, it's been going great for us for the last couple of days. The benchmark has been doing well. There's very obvious sector rotation. Leadership is coming in from the large cap space. As we gear up this morning, how likely is it that these gains will continue to roll in? Would you still be brave enough to advise fresh longs at these levels on the Nifty?
Good morning, Samia. I would say that the kind of movement that we were seeing in the index, it is day before there was some kind of, last Friday there was a bit of a fall, and after that yesterday it recouped and closed above 24,140. Now, I would say that since money is coming in, whatever be it, SIP or say pension fund money, but technically speaking, the uptrend continues and the next resistance is at around 24,500. Once 24,500 is taken out, then we would have to get to the drawing board and project further upside, and that could be even 1,000 points from thereafter. Because otherwise valuations and everything may be pretty high, but relentless buying continues, and so you should not stand on in front of that shorting this market, because it is going one way up, and the 9-day exponential moving average, which is currently around say 23,807, it is suggesting that there would be further upside. Regarding the bank Nifty, the next target will be, say, something like 52,960 to about 78. That is the kind of level I'm getting. Bank Nifty is also showing good going, and Nifty, mid-cap, Nifty, Fin Nifty, all are showing bullishness. So chances are you will see this kind of move continues. Whether I say parabolic, some stocks, okay, those effects will come. But at the moment, it is heady momentum that is playing in. And I have actually chosen two stocks from the large cap or high. Even if you classify them in mid cap, they are pretty good. I've chosen two pen stocks. And among the pen stocks, I've chosen the leader, that is it is Asian Paints. Asian Paints, I would put a stop loss below 28.95 on closing price basis. Asian Paints is showing a lot of traction last 3 days. There had been good movement on the upside. 29.57, 29.80 and 3,020. This is a short-term buy call. Short-term, when I say a short-term, it is at least, let's say, 3 weeks to 1 month, if not more. And the second stock is the second in position, that is Berger Paints in the paints industry. 493 is the stop loss, 514, 521 and 537. These are the three targets for Berger Paints, and the stop loss should be placed below 493 on closing price basis. I expect paint industry stocks might do well. Grasim has already moved up. Grasim may take a bit of a breather, but these two are showing a lot of traction.
There was a bunch of recommendations and the outlook on Nifty and Bank Nifty from Rajat Bose, but the focus has been auto sales, even though the stocks haven't done very much in trade yesterday, and the play has largely been auto ancillary. It's still important to highlight how the month has been for auto majors. Puneet has been tracking this and is standing by. Puneet, we reported on a few numbers before markets closed yesterday, but I believe there were a few more that came after market closing. You want to walk us through how the month has been for the auto majors?
Yeah, that's right, definitely. So a lot of interesting trends that have come up out of this month, which was expected to be largely subdued and quiet. So one of the major things is Hero MotoCorp, which came out after the market close. It reported a 15% sales growth versus expectation of a fall in this particular month. So that's been a very positive surprise. The other one is, of course, it came slightly at the end was Tata Motors, another one which was very disappointing. The numbers, the passenger vehicle sales were down 8%, while for commercial vehicles the sales have been down roughly 7%. A similar trend has been seen in Ashok Leyland as well, which came in during market hours. Another key surprise here was also VECV, which is the commercial vehicle arm of Eicher Motors. It reported a positive 10% sales growth, the only one in the commercial vehicle space to actually show some growth in this particular month. Also TVS, which has been, coming at roughly 5% growth in sales. Now this is slightly lower than the 9 to 10% expected, and potentially, they have lost some share in the premium motorcycle segment, and that's possibly because of Honda, where the supply chain issues has been resolved. We saw a similar impact of Honda supply chain issues getting resolved on Bajaj Auto as well, specifically in the 125cc segment, that they could have seen some particular pressure. When you look at the top three winners of this particular month, it has to be Mahindra and Mahindra, definitely outperforming by 22% growth, the highest across segments. The second one is, of course, Hero we spoke about, and Maruti as well, showing roughly 12% sales growth in this particular month. What's interesting is this rural theme play of Hero and Maruti has shown some interesting trend in this month. We'll definitely deep dive, as this is the last month before the Q1 earnings. So a lot more detail into what led to this particular. It could be the elections, could be the freebies, we never know, but the exact reason, while we will deep dive into it, will be interesting. The three biggest losers in this particular month has to be Tata Motors, passenger vehicle as well as commercial vehicle, down 8 and 6%, and Eicher Motors was down 5% in this particular month. So overall, rural theme playing, Mahindra continuing its outperformance, and a few select outperformers such as Maruti, Hero as well as Eicher Motors CV. Back to you.
Right, that's the auto stocks that have been quite the talking point yesterday, even though the stocks have been largely muted in terms of a reaction, apart from the likes of an Atul that actually gained 20% in trade. Just before we go into discussing how it looks in terms of fundamental news flow and get a view from the fundamental point of view, but technically, Rajat, any of those auto stocks that you're constructive on, and I'm going to throw in tire companies, and ancillary, auto ancillary as whole actually, battery, and maybe even the likes of a Castrol that did quite well yesterday. Rajat, what is your take on auto companies and auto ancillary names? So tire stocks included and battery companies also included.
Yeah, may I talk about Castrol? You also asked.
Yes,
Castrol.
you may, please. It was the top gainer yesterday.
Castrol looks pretty good. I think the new thing that is coming in for Castrol is cooling liquid that it would produce for data centers. So that has given a fillip to Castrol. Castrol looks pretty good, although it has moved up considerably over the last few months. But still, it looks pretty interesting in the sense that there is a possible breakout that might happen once Castrol goes beyond, say, 230. And chances are, if this move that happened yesterday, it continues, it will see 230 and above levels. So Castrol is pretty good. Auto ancillaries, which one do you want me to talk about?
Rajat, I'll come in there. I have two names that I would want you to check for me. One of them is a tire company, JK Tire. The other one is a small company called Epigral, Epigral.
Again, spell it again.
Epigral. Never mind, just give me the tire stocks, Rajat.
Okay. JK Tire, what I find is that JK Tire has actually given a breakout from a range-bound activity. 375 to about 425 had been the range so far, but now it is moving up. It has crossed all the moving averages. And once it sustains above 445, then it is headed for 500 to about 525. That being that, say, even Apollo is one stock that also might show better movement if it manages to cross 550 to about 560.
Well, that's the call coming in on tire stocks and Castrol, implied Nifty indicating to a positive start this morning. In a few minutes, we'll take a break. We'll come back, track pre-open and go you up for trade, so stay tuned.
All right, back with India Market Open right here on NDTV Profit in conversation with Rajat Bose as well as Nirav Asher. We've spoken about the charts for the autos, but a minute to the pre-open left, and while the implied open suggests the start which is in the green, the question, Nirav, is the surprise that some of the companies have thrown up, both positive and negative. Ashok Leyland, Tata Motors are expected to give good CV numbers. They haven't. So is there a problem with the CV cycle, part one? And two, Hero MotoCorp, the 15% uptick in sales was a blowout number, completely unexpected. So do you go out and invest in a Hero MotoCorp? Conversely, if you were invested in a Ashok Leyland, would you get out of that investment?
Starting off with the CV cycle as well as the passenger vehicle space also, I think we would continue to stay invested in these stocks. And most of these companies had indicated earlier that we expect a slowdown on account of the election, elections period, and as well as the heat wave. So I think a couple of these factors, they impacted the footfalls at the retail level. So it will be a wait and watch situation. Most of these companies have indicated that the inquiry pipeline continues to be quite strong. And on the basis of this, they are expecting a revival in sales going forward from August as the festival season starts. Of course, there could be an uptick in the infrastructure activity too once the monsoons are over. So I think it will be a wait and watch for this point of time as far as both the CV space and the passenger vehicle space is concerned. As far as the two-wheelers are concerned, I think all the three companies, whether it is Bajaj Auto or TVS or Hero MotoCorp, if you see the performance during the last 1 year, the stock prices have nearly doubled. So I think a very strong performance which was expected from all these companies, and most of these companies have delivered too. So I think yesterday's performance, Hero MotoCorp should give a further fillip to the stock. We have recommended this stock already at nearly 3,800 levels. So it's a good time to see what kind of re-rating takes place going forward into the stock.
You've got your whole brokerage pack that will be in focus. We've, of course, Niraj just talked to Nirav about it, but technically as well, we'll get a view on the likes of 5paisa, Motilal, that will see some pressure in today, Angel One in today's day of trade. But this, of course, could be market moving and could probably justify why you saw such a big move on Dixon in yesterday's day of trade. We believe the August review of the MSCI Standard Index could attract about $1.8 billion of inflows in the country through inclusion of 6 companies, Nuvama says. Richa is standing by with more on this. Richa, firstly tell us, what does Nuvama believe in terms of the quantity of funds that are expected and which companies are going to be beneficiaries of this? I believe the likes of a Dixon and Vodafone could gain quite significantly on back of this.
House expects a cumulative of $1.18 billion of dollar inflows for the MSCI index in the August review, and the highest inflows can come from Dixon and Vodafone Idea. Now, let me list down the 6 stocks which the brokerage house believes have made the cut and can be possibly included in the index in the August review. Now, number 1 is Vodafone Idea, which is followed by Prestige Estates, Oberoi Realty, Schaeffler India, Dixon Technologies, and Uno Minda. And the official announcement will likely take place on 13th of August, and this adjustments will take place on the 30th of August. Now, the brokerage house interestingly also mentions HDFC Bank. Now, the FY holding for the company will come out just about in this week, and the brokerage house says that if the shareholding favors a weight increase in the MSCI index, then the stock could see a further 10 to 15% upside from here. But if the holding suggests an unfavorable outcome, if the stock is not likely to be included in the index, then the HDFC Bank stock would likely settle at 1600 level. So this is what Nuvama broadly believes about the MSCI index inclusion.
Okay. Thanks for that, Rucha. Watch out for some of those stocks as well. Just get that list up yet again. Of course, if can HDFC Bank indeed cool off, and what are the possible inclusions? Prestige, Oberoi, and Dixon, Uno Minda, and Schaeffler. Now, I want to pick up Vodafone here, simply because it's got some brokerage calls going as well for itself. Rajat, after having a stellar run, profit booking for the last couple of days for Vodafone. Will it or can it see buying? Would you be a buyer in V?
Look, if you look at the Vodafone weekly chart, this is one stock that is giving the bullish signal in the sense that Vodafone is consolidating and now the weekly moving averages are also been crossed and it is moving up. So I have a feeling that you might see once it crosses 20, it will gain more traction. 23.5 to about 24 would be the next target, but eventual target could be something like 32. So this is about a year and a half kind of target that I'm giving. But Vodafone on any dip may be bought. This stock doesn't move that strongly because this has got very large equity and operator activity is pretty much limited. That's why the move is very slow.
That's why the move is slow. You know, Nirav, for everybody who cried foul about the prospects of a Vodafone at 12 rupees when the funding came in from GQG and others and said it's a risky stock, it's given 50% returns. So there is merit in not rubbishing the notes given by people which are citing targets of 23 or 28 or more as well, right? But is there a case to buy a Vodafone or would you rather buy a Bharti, for example?
Definitely, there is a case for buying Vodafone because all the hard work in terms of reviving the company has been done. Now we also have the tariff hike which has been announced. Having said that, a lot of work needs to be done further. But there is positivity. So I think the target price, what is being talked about, 24, 25 levels, looks achievable, definitely.
Okay. The other, Nirav, the other stock of yesterday, actually two stocks which stood out in trade yesterday, right? One of them was Atul Auto, just splendid sales month after month after month for 6 months in a row, another 3% up today, and which was up 20% yesterday. Wockhardt was up 20% yesterday, looks like starting off well again today. Now my question is, have you looked at fundamentally both of these? Both of these have fundamental announcements to themselves which led to the up move. Do you track them?
So starting off with Wockhardt, I think they are on the verge of doing a clinical 3 trial for their cancer drug. And I think if it receives approval, then I think we could see further upside in this stock. The stock has come out of a lull, and I think now if everything hinges on this development, if the clinical 3 trials are successful, then again we could see a big move in Wockhardt. And as far as Atul Auto is concerned, this is a small company, but the sales figures have been phenomenal. There's been a marked improvement in the sales, and I think that is driving the growth for this company.
So are you a buyer at these prices in either of them?
No, because we've missed the opportunity as far as Atul Auto is concerned, and Wockhardt we were not looking at. We were not tracking it actively.
Okay, Rajat, Wockhardt has had a splendid move. Can it do more?
See, Wockhardt, the move has been pretty fast and it's really a good move. Similarly, the stock that you discussed a little earlier, that is Atul Auto, these stocks have actually jumped the way it has. Wockhardt has actually completed a saucer pattern. That saucer pattern had been there for several years. So this is a bullish pattern. And once the saucer pattern has been breached decisively, you can expect that again getting into those levels from where these huge moves have started. For the last couple of weeks, Wockhardt is showing this kind of traction. It isn't going to fall immediately. So any dip should be used to buy. And at the moment, it is at 832. Going forward, it can go up to say 870, 875. After that, we would have to make a new projection.
Okay, we will watch out for some of these stocks. Now, to some key brokerage notes, and Mihika joins in with a Jefferies note on ICICI Lombard. Mihika, interesting you've chosen this. Good morning. Why so?
Good morning. So what they've done is they've hiked the target price from previously the target price was at 1,950 and now they've hiked it to 2,090 rupees, which offers a 16% upside to the previous close. And this is and they've maintained their buy rating, and this is mainly due to ICICI Lombard's new retail health insurance product called Elevate, which will kind of help it ramp up its retail health segment presence, which currently it has only a 3% market share. Now Jefferies believe that the new product has many industry firsts and it could get a positive response from customers as well as agents. Now, retail health insurance is a space that ICICI Lombard has in the past avoided due to concerns over claims and vintage claims. However, with pricing improvement and competitive resetting, the new product could kind of elevate. The new product Elevate could help push the presence for ICICI Lombard, and what Jefferies expects, it could help the CAGR growth in the retail health segment at 25% CAGR over FY24 and 27. It could also help 17% growth in the overall premiums of the company. Moreover, what Jefferies is saying is the company is also benefiting from the healthy industry growth as well as improving competitive intensity. Over FY24 and FY27, the premiums will grow at a 17% CAGR according to Jefferies, and they've also kind of they've raised their earnings estimates a bit to factor in the stronger growth in health insurance as well as the shift to IFRS.
Okay. Thanks, Mihika, for that. Interesting. Would you find any favor, Nira, with a general insurance firm like ICICI Lombard? Jefferies seems to be liking it for the reasons that Mihika just enumerated.
So it's related to the new product launch. So everything will depend on how the product performs. But we've not been looking at this space at this point of time.
That's ICICI Lombard. For usually insurance stocks is where the play is quite boring. The movements are rather intermittent and don't, of course, see very sharp upticks one way or the other. Rajat, you want to comment on this one? Insurance stocks, anything here that you like? An ICICI Pru, ICICI Lombard, HDFC, LIC. Take your pick.
Most of them are gaining fresh traction. And the stock in question, that is ICICI Lombard, it is, once it crosses 1850, it will have more strength. But immediately, there could be some resistance around 1850. But its uptrend is pretty strong and it has cleared the resistance around 1700 to about 1725 decisively. So that way, it looks pretty good. Other insurance company stocks, even LIC or say HDFC Life, SBI Life, you can cherry pick among them. I would say SBI Life would be a very good bet.
Right, that's the call coming in on SBI Life and Patanjali. I'll just quickly check Walker. I don't know whether Niraj just checked in pre-open. Yeah, it has, of course. Okay, so quiet, and I don't think this is going to be quiet for too long. It's going to start seeing buying pretty much at the get-go in trade. IT, Nirav, how do you feel about IT? I know there has been a little bit of a run-up in the last few days on IT stocks, but preempting a rate cut from the Fed in November, do you feel like this could be a good strategy to load up on IT between now and the next few weeks and, of course, then sit tight?
Yeah, so we began to see some moves in IT prior to the Q1 results, and I think as we had suggested that we are recommending stocks like Infosys and TCS to our clients, and we began to see some movement over there. Yesterday, we've seen a double upgrade for Wipro also, and mid-cap stocks have also started moving. Persistent, we saw some good movement. So yes, but we are going cautious on IT at this point of time. We are recommending Infosys and TCS for the time being.
Nothing on the mid-cap space, huh, Nirav?
Nothing on the mid-cap space as of now.
Right. Rajat, what about you? Any IT stocks on your buy list at the current market price for the near term?
Well, earlier in your show, I have already talked about LTI Mindtree. Apart from that, today, if you ask me, I would opt for Coforge. Coforge looks pretty good. If it crosses 5,600, then there is every possibility that it would go up to something like 58, 75 kind of levels. And its moving averages, the way things have panned out. Moving averages are giving a signal that a long-term, medium to long-term up move might be gaining traction in Coforge. So Coforge is a good buy at current levels.
Okay, and Rajat, I have 30 seconds before the market starts. The one stock that you would bet on this morning, one top call for the morning.
Oh, that will be HDFC Bank. HDFC Bank needs to take out 1720. If it manages to get past 1720 and stay above that with a lot of good buying, then this time it is going to post a new high. That will obviously happen, but it might cross 1800 to about 1825 as well. HDFC Bank looks pretty positive. It has given a flag formation, and that flag formation breakout is on the cards.
Okay, confident Rajat Bose on HDFC Bank. Let's see how it starts off. Here are the first rates this Tuesday morning. We are starting off about 60 points, just about what the pre-open was, implied open was indicating, just around 24,200. Remember, this has been the point of key resistance, and a lot of calls written at this level. So watch out for this. Bring up the Bank Nifty and the Nifty IT, because those two have been the key indices. Banks mildly underperforming. IT, let's see if it's carrying on. Oh my God, IT is another 0.5% higher. Some really strong moves for IT for the last few days, must say. 0.6% higher now. Bring up the mid cap and the small caps very quickly before we get to the heat map. About 0.29% for the mid cap index. The small caps maybe a bit better, 0.33%. Not bad going. Let's get the heat map up on the screen and let's see what's moving and what's not. IT stocks should be right up there maybe. Wipro, Tech Mahindra, HCL Tech amongst the top 4 gainers. iShares is the top gainer. There's strength in ONGC, higher crude prices presumably. Airtel adds on to some more gains. HDFC Bank 0.5% higher. Rajat Bose's top call this morning. He said 1720. We'll bring up that price as well. But on the losers, Bajaj Auto down. Interestingly, I don't see Hero MotoCorp as amongst the top performers, and that's a big surprise to me because I thought the numbers were stellar. Let's wait and watch if this changes. Just before Samina takes over, just get the HDFC Bank stock price on the chart. You mentioned 1720. A CLSA note had spoken about 1734 as a key breakout level. Currently, HDFC Bank at 1715. Let's see if it does more. Watch out for HDFC Bank in the session today. Samina, what are you spotting?
Well, you watch out for HDFC and I'll watch out for IT because that seems to be in quite a sweet spot this morning. I guess all that excitement and anticipation of a rate cut from the US is what's keeping those IT stocks up and about. And traders, remember, they've been underdogs. They've not seen too much of a catch-up in terms of stock play recently. Well, one space that is sulking this morning is brokerages, and that comes in after SEBI has asked brokerages to charge their clients uniformly, which means that discount brokers cannot or shouldn't be providing discounts in terms of large volume trades. On back of which, you're seeing a big cut on Angel One, 5 Paisa, Anand Rathi, even the likes of Nuvama, JM Financial are seeing weakness across the board. 5 Paisa is down 4%, Angel One is down 7%. Take a look at how Anand JM is trading flat, how Anand Rathi is doing, because in pre-open trade that stock was also seeing some selling pressure. It's off the day's low point, but remember they also have a fairly large book in terms of brokerage, but the stock not doing too badly. Motilal Oswal, if I've got that on, it'd be helpful to pull that up, but if not, it just gives you a sense of what brokerages are doing this morning. There is pressure. Angel One is leading the pack in terms of losses, down about 7%. A few other names that I want to quickly track before we move on and talk about the broader market performance as whole. Patanjali is having a pleasant morning. It was one of the top gainers in trade. It's up 3% as it looks to demerge its non-food business. So that is a stock of the morning. No runaway rally, but nevertheless a positive bias is what we are seeing. CSB Bank and NMDC, there were a few numbers that came in terms of updates, business updates. So you had CSB where gross advances are up 18% and deposits are also up 22%, on back of which the stock is up 6.5%. NMDC, on the other hand, saw its June production volumes actually down quite significantly, 3.2% YOY, and sales volumes were down 9%. They had also cut product prices yesterday. NMDC will see some weakness, open with a downside bias, but further losses cannot be ruled out at this stage. That's pretty much the market sentiment. CSB, remember, is up 6%. Early last week, they had a pretty large a pretty large block deal, and despite that, we didn't see the stock correcting too much. Those numbers can explain to you why it's actually holding up, and of course, the weekly and monthly update, quarterly update looking pretty good. So all in all, Niraj, it's not too euphoric this morning, but pockets of interest and pockets of losses that we're seeing.
Yeah, I mean, the stocks in the broking side most certainly looking at wobbly. Wockhardt, by the way, is up another 6%. Samina was right. It won't stay quiet for too long, and it's not staying quiet. 7.5% higher for Wockhardt now. A big 8% now. Yet again, you look at this week's chart or 7 days chart for Wockhardt, and it tells you a story of a stock which is on steroids maybe, but fabulous move there on Wockhardt for the last few days. I wonder if Atul Auto is perking up as well. This is Wockhardt, of course. In a week, about 50% or over that. Atul Auto should come up on your screen, and let's see if that one is seeing a little bit of an uptick. You know, hiring has looked weak, and that is showing on InfoEdge, and some collateral damage on PB Fintech as well in the session today. So 3% lower for PB Fintech, but InfoEdge about 2.5% lower in trade. So that's the other one. The Naukri Jobs Peak Index has not looked very good. CSB Bank, very strong advances and deposits, and that stock is up 5.5%. And much like ONGC, Oil India too is up about 5% yet again with crude prices spiking up. I wonder if the tire stocks, paint stocks are in the red as a result of collateral damage because of a crude price uptick. Yes, some bit of a shave off into some of the tire names as well. But oil upstream looks solid. Rajat Bose, come in first up on Oil India and ONGC, both of them revving up in trade.
Yeah, ONGC I track on a regular basis. So I will talk about ONGC.
Sure.
ONGC, current move is very encouraging. It is going up, but then the eventual target that I have chalked out is about 313 on the upside. But if you are a short-term player, fine, but do not buy for medium to long-term because there is going to be a substantial correction. The recent lows notwithstanding. So ONGC for the day is definitely good, but it requires it will get into a big correction over the next few months. It will pan out.
Well, it's another morning of Garden Reach doing well after a big up move yesterday. The stock continues to build on those gains. 5.5% higher is what we have on defense. Nirav, do you feel like there's still money to be made in this sector? Because every now and then you'll have an order win. Some counters react, some don't. So, case in point, you had Cochin Shipyard, BEL, and Garden Reach all report significant order wins. It's only Garden Reach that's gained 10% in the lot. Is an opportunity still persist here? Because first it was buy any defense and you'd make money. That, I believe, is now changing.
We'll definitely be buyers as far as GRSE is concerned and Cochin Shipyard is concerned. And in the other category, we have BEL. We continue to remain very bullish on BEL also and HAL also. So these are buys at any point of time, at least as far as the situation is concerned now.
Okay. So, sorry, Nirav, did you say that you would buy selectively, and if so, which are these? Sorry, I didn't quite hear you.
Yeah, selectively, of course. So we would be buyers in GRSE, Cochin Shipyard, BEL and HAL.
Okay, so BEL and HAL, and BEL, remember, won that large order as well. So that's one stock that you certainly want to keep on your mind. By the way, Oil India is up. Yep, it was up 7% at the point of time. Just come off a little bit, still up about 6%. We asked Rajat about oil upstream. Nirav Ashar, would you be a buyer into these PSUs? Oil India, ONGC?
We like Oil India, and we also would like to look at city gas distribution companies, particularly Indraprastha Gas and Mahanagar Gas.
Okay, and they've been on a bit of a roll, Nirav. The valuations no longer as they used to be. You still like them?
Yes, because we feel that the outlook for the gas-based players is going to improve going forward.
Right. Rajat, I don't know whether you're big on shorting stocks, but would you consider going short on some of these brokerage counters right now?
Brokerage counter, which one?
Angel One, Motilal, BSC as well, which is of course the platform, but it's under some weakness. And yeah, I think that's it. Angel One, Motilal, Anand Rathi maybe.
See, all these brokerage stocks led by, say, Motilal Oswal, these stocks have actually moved up considerably over the last, say, 1 year or so. Say, like Motilal Oswal, this moved up from, say, something like 150, and the current level is about 600. So, again, allow me to say something about the parabolic pattern and why there are parabolic patterns even here. Those people are, in fact, because I talk about this on your channel, a lot of your viewers have given or written to me that why are you talking about this and what is so great about it? The thing is that I would say go to IEX chart and go to IRCTC monthly chart. You will understand why I'm cautioning people about this parabolic patterns. And one more thing, Samina, Niraj, and people like me together, we would have to see a market that will become range bound, very painful kind of thing, because we are discounting too much going into the future. Every stock is going parabolic and ballistic. This doesn't continue for a long time. And once the problem starts happening, there would be problems, there would be big issues. So I would suggest part profit booking in this kind of stocks that have moved up 3 times, 4 times. Look at Garden Rich. You were discussing a little earlier. It has moved up, I think, 4 times in 1 year. This kind of moves are not sustainable. I have checked this parabolic pattern all over the world. They actually give the same thing. So that is the reason why I'm pretty wary of these stocks going ballistic and vertical, or if you like parabolic, whatever terminology you use is that is fine, but then there is every risk out there. On the other hand, you will see a very good move after, say, about 9-year hiatus. Okhard has started moving. There, IEX is another stock that will also see a lot of good movement. These are the stocks, there is much less risk comparative to all these ballistic movers already done.
And in fact, we've seen that in funds as well. I mean, you look at just case in point, a UTI Momentum, a stock that plays momentum, stock that does swing trading or plays strength, has seen significant outperformance even on individual investor portfolios. Nina, we want to comment on that because this is something that we don't talk about often, but the fact is that investors who have invested in a momentum strategy have done far better than maybe a large cap, mid cap, or any sort of active portfolios.
So I'd just like to point out about the shipbuilding companies which we just discussed. We've not seen such kind of order book before. We've not seen this kind of agenda, which is the indigenization agenda. We've not seen this kind of order inflows. We've never seen a situation where we are targeting about 90% of ships being built indigenously, complete reduction in dependence on the foreign suppliers. So I think this is something new. If one were to take into account railway stocks, there's a complete overhaul of the wagons. So 3 lakh wagons are going to be replaced, modernized. There's modernization across the board. This kind of investments have not happened before. So I think that is what justifies what is going ahead. The order books are full. The execution, there's a lot of pressure on execution. There are very few players who are there in the market. So I think they are the first movers and they are getting advantage in terms of valuation. So I would put it that way. But of course, the market has to take the final call.
It's looking a little unsure, and it wouldn't surprise me if today is a day that we actually go home in the red. Bank Nifty slightly trading flat to slightly lower. Remember, since Wednesday last week, it's been pretty much a one-way journey, apart from on Friday, where the last 20 minutes of trade saw the markets consolidate a little bit on the downside. But the last 5 days have been very, very strong for the benchmark. Today could be a morning when you will see some profits potentially getting off or being taken off the table. The Nifty is flat as a pancake, as we see it. Well, the breadth of the market's also not very convincing, and there may not be too many triggers in that sense for the markets to take them higher in today's day of trade. Well, a few counters that are still looking bad is in Angel One. Chola Finance Holding, which has had a good run over the last few days, is seeing a cut of 3% this morning. PB Fintech, that was a top gainer in trade yesterday, is seeing profits off the table. InfoEdge, PSC, Marico, Raymond, HDFC Asset Management are some of your top losers. A quick check on Walkhard. This has been a star trade between Friday and yesterday, and it's moderated a little bit of its gains. So it's still up and about, but not that 8% rally that Niraj had highlighted. It's seen some profit taking at high levels, closer to levels of 900 in trade right now. On the gaining side, you've got Garden Reach, that's your stop trade. Solar Industries, after having it pretty volatile in the last 4 to 5 weeks, you're seeing a significant up move on solar. Chalet Hotels, All India, CSB Bank, JM. Archean is up 3.5%. There are reports, of course, that on Archean, which could be potentially the reason why you're seeing a big up move on the stock. Nirav, you want to come in on Archean Chemicals for me? It's been a preferred, expensive, nevertheless, counter in the specialty chemical space. Last week, you had Bain Piramal do a little bit of the block deal to get out of the company. Goldman, of course, notched it up. How do you feel about Archean?
So the specialty chemical space has been on a recovery space, and we are seeing destocking which has happened in the industry, and we are seeing demand making a comeback. So I think from that perspective, the prospects look good in the near term.
And we'll leave it at that. Thanks so much, both of you, for joining in today and giving us your perspectives. Really appreciate your time. Take a quick break. Up next, we'll be joined by Rishi Sanghvi of Sanghvi Movers. They won a new order, and time to talk about what could happen in the year as well. P. Johnson on the other side. Stay tuned. Sangi Movers is a stock in focus after clocking in a very healthy FY24, wherein their margins improved significantly and the bottom line numbers moved up well. They seem to have started off quarter one on a decent footing. At least one of the order wins that has come in recently, 180 crores, is not a bad thing. But interestingly, it's two orders, one from an IPP and the second one from an EPC player. Let's get in Rishi Sanghvi, MD of Sangi Movers, to talk about these orders and the outlook for FY25 ahead. Rishi, great having you. Thanks for taking the time out. I hope all is well. I'd love to talk about a few things, Rishi. Firstly, congratulations on these orders. Can you fill us in on whether the order inflows in quarter one thus far have been at par with what you'd have anticipated, or have things been slow because of the election period?
Good morning, Niraj, and thanks for having me. The order book is actually looking very healthy. We are very bullish on this year, notwithstanding an election and monsoon period. We foresee that we will outpace our top line for last year.
Okay. So this 180 crores order win, one is from an IPP, I believe, which is largely in line with what your recent orders or past orders or business line largely is, and correct me if I'm wrong here. But interestingly, there is an EPC order too out there. I thought power was a buzz and your hands would be full. Why get into EPC, which is maybe a newer line, maybe lower margins than power per se? Why do that, Rishi? Why this diversification?
So the order comes from an hydrocarbon sector, and it's a new business segment for us. The primary reason for us to enter into construction services for both refineries and the renewable wind energy sector is that there is a tremendous opportunity and a lot of demand from our customers. They are pulling us in, looking for a well-established, well-run company. And while the margins on the construction side of the business are lower, we believe that there will be significant volume play and a large number of demand that should make the space very interesting for us.
Rishi, hi, it's also Samina joining in. So Rishi, we understand then the EPC business is largely volume play, which will make good the margins. They may be slightly lower than your traditional business. How much does EPC currently contribute to your top line, and where do you see that over the next 2 to 3 years?
Hi, Samina. Good morning. So, this year we believe that the crane business, which is our core, where the margins are around 60% EBITDA, will land around 600 crores. And the EPC business will add another 400 crores to the top line. So we believe we'll end this year anywhere between 950 to 1,000 crores.
That is top line across the board, about 1,000 odd crores. Rishi, is that a fair expectation? And is that the kind of growth rate you'll be working with over the next 2 to 3 years as well?
Well, we definitely see that this year. And going forward, we hope to build up on that momentum. We have been growing around 25 to 30% the top line for the last 3 years.
Rishi, I mean, your margins in your business are phenomenal, to say the least, and I guess that's what explains why you're in it and why we are talking to you and why investors are also very pleased. At margins at about 63% versus 59% that we've seen, how sustainable is this, especially given that the weightage or contribution from EPC is expected to go up in the next couple of years? What is the margin range that you would be comfortable with?
So on the crane business, which is our core and I believe will constitute anywhere between 60 to 65% of our top line for this financial year, we are confident of maintaining last year's margins. On the EPC side, of course, it's a volume business with lower margins. So we expect to end up anywhere between 10 to 15% on the EPC side.
So what would console margins be like, Rishi, based on the growth that you anticipate for each of these segments?
It would be anywhere between 35 to 40%, because again, it's 400 crores in EPC at 10% and about 60% on 600 crores on the crane business.
Right.
Sorry, Rishi, just so that I don't get this wrong, okay, I'm just trying to reiterate this. When I looked at your numbers, your console numbers for FY24, right, or TTM, the operating margins console were about 63%, if I'm not wrong, for FY24.
That's right.
Now, you are saying that your margins will go down to 40% from the 63% because of the change in mix.
Yes, but yes, you are right. But the base itself is much larger. We're going from 620 to 1,000 crores.
Yeah, agree. But
So
because
we'll do about 360 on the crane business and about 40 to 50 crores on the EPC business. So on a consolidated blended, we would be around 400 on 1,000 crore base.
So Rishi, why the focus so much more on top line as opposed to bottom line? I mean, that's a huge cut on margins, even though we completely get that your focus remains on growing revenue.
It's not only on growing revenue. This is where the sector is headed. For example, in the renewable wind energy space, there is a severe shortage of well-established construction players who can service the independent power producers. OEMs have stopped putting up projects, and very few OEMs, Suzlon to a large extent, maybe Inox, are putting up turnkey services in the wind industry. And the independent power producers do not have the capacity or ability and the bandwidth to undertake the construction space. So there's a massive white opportunity there. For example, in the renewable space, we have a 10 gigawatt inquiry pipeline as of today. And we're extremely bullish on how the sector is going to shape up, not only in this financial year, but going forward. We have started adding value-added services in and around our crane business. So we undertake the complete mechanical, civil, electrical, surface logistics, which is the complete balance of plant activities for the renewable wind space. So on a 10 gigawatt order inquiry pipeline, and with the way the renewable energy sector has positioned itself and will continue to grow over the next few years, we believe that this is a very exciting space for us, will add a lot of value to the company, and we believe that we can create a lot of value for our customers.
Rishi, sorry, I'm just digressing a bit because what you're saying gives us lead indications into what other businesses might also do. Sorry, did I hear you say that except for Suzlon and Inox, there aren't enough players putting up capacities? And is there a bit of a red mark because the targets are very lofty? The con calls from both Inox and Suzlon seem to be very constructive about the capacities that they will come up with and the execution that they will do. You are saying beyond that there isn't much happening, but within this itself... Sorry, please.
Yes, because the other OEMs are more interested in product supply rather than project execution.
Okay.
So, the international OEMs are not too focused on delivering turnkey EPC projects to their IPPs.
Got it.
So there is a massive white space in this space. There are a lot of IPPs which are fund-backed, sovereign funds, pension funds, private equity funds, and they don't have the bandwidth to execute turnkey projects.
Got it.
So there's a great opportunity for a player like ourselves to deliver the complete balance of plant scope to renewable players. And that's the exciting space that we are focused on capitalizing on going forward.
Okay. Rishi, just a follow-up to the other question that you did for then. So let's assume you're tapping this white space. I heard you say that that's where the industry is moving. So you'll probably settle down at 40% margins, but you'll get top-line growth. I just did a back-of-the-envelope calculation. On a 600 crore top line, if you did 63% margin, you ended squarely about 370, 380 crores of EBITDA. On a 1,000 crore top line, you do 40% margin, you end up squarely around those levels. So for FY25, you will show top line growth, not EBITDA growth, but that will set the base for the next year. Do you expect another year of very high top line growth in FY26 as well?
So primarily what we are trying to do is we are consolidating services for the IPPs. And going forward, we will be bringing in some of the services that we offer our customers in-house. So it will be a year of, because this is a new business, it has a gestation period, our operating margins will not be as high as they would traditionally. But going forward, we will reach a certain scale, we will be able to bring in capabilities in-house, and that will drive down our costs and build up our margins going forward.
Rishi, just taking a cue from those numbers, I believe currently utilization stands close to 83-84%. If you're looking to significantly scale your top line, as we understand from this conversation, I'm assuming there'll be aggressive expansion plans on the cards. You want to walk us through what is lined up in the next, by the end of this calendar year and maybe in the next year as well, and how do you plan to fund those expansions? Because I believe you're still sitting on some debt on your books.
Absolutely. So, in the last 4 years, we have done about approximately 950 crores of capex, and we are only at a net debt of almost 250 to 280 crores. So we have been able to manage our expansion primarily through debt funding, with 30% of the margin being funded through internal accruals. We are also sitting on a significant cash surplus on our balance sheet, which is to the tune of about 150 to 170 crores. So this year, the board has approved for FY 24-25 a capex plan of about 150 to 200 crores. But looking at the demand that there is in the market, our inquiry pipeline, and the way that the economy is performing, I do believe that we may have to go back to the board for further approval of capex.
Right. And when do we expect these fundraising plans? When do you plan to go back to the board and discuss these fundraising plans?
It would be subject to how things pan out in the third quarter.
Okay. Rishi, I have one final question. I don't know, I don't have a handle on what the follow-ups were to this proposal, I believe, that was laid out after the results of increasing the directors' compensation. But I do know that there was a to and fro and a feedback that you had received and you had asked for from investors about the proposal. Where are we there, and is there a rationale for whatever decision you've arrived at? Because it was a fairly stiff increase, I believe, in directors' compensation.
Right. So, Niraj, I am the promoter of the company, and it would not be right for me to speak on this topic because I am the interested party. But the increase in the compensation for the managing director was approved by the Nomination and Remuneration Committee and approved by the Board of Directors. The proposal will now be put up in the annual general meeting where all the shareholders will vote on it. But the rationale that the board and the Nomination and Remuneration Committee had was that this was a phenomenal and historical year, FY 24, and the company has delivered significant and historical numbers. And they thought it prudent to compensate the management for the performance that the company has delivered. So the proposal has moved through the appropriate channels and will be put up towards the shareholders in their annual general meeting.
Very lastly, Rishi, while we've of course had a very extensive conversation, very lastly, on your order book, which is at about 426 crores, what is the timeline for execution and closure of that order book? And what is the quantum of orders that you're currently bidding for? When can we expect some order wins from your stable?
Right. So actually our order book today stands around 600 to 650 crores. And the way we disclose our order book is that the entirety of it is to be executed in this financial year. So we believe that we are on track to surpass last year's numbers, as I have already indicated. And we believe that we have a very healthy inquiry pipeline, which will translate to significant orders within this financial year.
Thank you. Thank you very much, Rishi. It was such a pleasure to talk to you, get an understanding of what's happening in the industry, what's happening in Sangi Motors. Good luck. It looks promising. I hope things play out as expected, and we will talk to you once you report earnings in the quarter. But until then, good luck and see you soon. That was Sangi Movers talking about how business is doing. They're back to significant orders, gunning for a top line of about 1,000 odd crores. That would come at a cost of margins in the near term, which should be compromised. But of course, it's going to be FY26 that would then see margins and top line growing significantly. Fundraising plans in order to go up to that sort of revenue, they are looking to expand extensively and would approve fundraising plans in the third quarter of the financial year. But moving on from the company to Manav Chopra, Director Technical Analyst of Nuvama Institutional Equities, joining in to talk to us about how he views the markets from where we stand right now. Manav, hi, thanks a ton for joining in. You've put out a bunch of reports and we'll talk about those because stocks in the IT pack seems to have taken a cue from that report and have ran up quite sharply, actually.
Yes, Samina, I wanted to give credit because it was 10 or 15 days ago, if I'm not wrong. Manav might have the exact date when he put out that buy call on IT. Nobody quite thought the IT stocks will rally, and they've had a fabulous run.
You've had a bunch of very happy clients, Manav.
Yes,
and a promotion due.
Very kind to us.
But just before we go into IT, a quick word on how comfortable are you with where the Nifty stands right now? New record highs, the 5 days markets have seemed very stable. The VIX is controlled. It's been gradual, the up move. The breadth may not be very supportive, but we've seen sector rotation, large cap assuming leadership. I mean, it's all working for us. Do you feel like further upside in the near term is a given?
Yes, very much. So, I just want to phrase it in a simple two parts. If we look into the markets pre-election, we did witness a lot of laggards coming from the frontline space, let it be the private banks or the IT, Reliance. The heavy lifters were actually being the underperformers of the market. But what has happened post-election, the significant breadth of the market has improved drastically. We have seen the market movers actually take the leadership, starting from the private banks, and now what we are witnessing in IT, Reliance is near its all-time highs. Larsen is also basing out along with some frontline infra names. So the participation post-election results on the heavyweight Nifty 50 names have been very, very strong, which wasn't the case prior to the election. It was more or less like a polarized kind of a rally, and the market breadth was actually deteriorating from the frontline space. But currently, when we look into the picture, it's far more broad-based, which give us a very strong confidence that the current rally is likely to resume from the current levels too. Our base case for the Nifty on the upside should be close to 25,000 to 25,500. And I think the larger participation for the upside in the markets would be seen from the IT space. That's when we published our report on the IT. But going forward, I think we will be seeing a sector rotation. I think that has largely been the case for any bull market in general. But within the large cap space, the leadership, which was missing in the IT since past few months, we would be seeing that coming back, and off late that we have seen the witness. For a very short-term perspective, my sense is that 23,000, 23,500 will remain very strong supports for the markets. And going forward, I don't expect any meaningful correction coming in. So one very important data that I don't see any exhaustion or a short-term topping out for the market. Also, when we look at the global market charts, everything seems to be going into a scenario where the momentum and the rally continues towards 25,000 and 25,500 levels.
Got it. Okay, Manav, but great call on the Nifty 3-4 months back. Great call on IT a few days back. Now, I'd love to understand, are you still constructive? Because we're not talking when you release the report, but a few days after. So there's a bit of a rally that has happened. Are you still constructive?
Very much. If you look at our long-term perspective on IT, our base call is that, we'll be expecting new highs coming into the IT index. That is our first base case, which is roughly at 39,000 for the IT index. And the next higher upside target is close to 42,000. So we are looking quite constructive for the IT index for next 6 months and more than that. If we look into the long-term perspective of IT, it has been in a larger uptrend. The last few months, after the IT index topped out in the month of Feb, we witnessed 3 months of intermediate correction. This correction phase was nothing but a short-term pullback in a larger uptrend, and the kind of a reversal that we have seen in the month, post the election in the month of June, that revalidated and reconfirmed the last long-term thesis for the IT, for the sector in general. The IT index took 3 months to decline from 39,000 to 32,000 levels, but it took one single month in the month of June. It exceeded previous 2 months highs. So, largely these are some qualification criteria when a sector is in a larger uptrend. The declining path is more slow, more grinding, but when the recovery happens, it happens actually much ahead of the time and very, very quick in span. Obviously, there were a lot of short squeeze that played out, but the larger theme still looks very much intact. Within this space, we have also witnessed early leadership coming into the names like Tech Mahindra. This was the first large cap stock which have also exceeded its giant highs. And going forward, my base case for a stock like Tech Mahindra, we're expecting targets of close to 1800, 1900 levels. So my top pecking order within the large cap is going to be Infosys and Tech Mahindra. Infosys also has formed a very strong structural bottom, and on a long-term model charts, the stock indicates a near-term target of close to 1800, which is close to its Feb highs, and thereafter we head towards its all-time highs. So the structural intact for the IT is very much positive, and I think going forward, next 6 months will definitely belong to the IT space. Within the mid caps in IT, we like Persistent System and Naukri.
Persistent and Naukri. So, Manav, fair assumption that if people are just listening to you right now and have not read that report, Naukri at the current market price, Persistent at the current market price, Infi and Tech Mahindra should be bought for the next 6 months?
Absolutely. I think that is our medium-term perspective. We are looking at for a horizon of at least 6 months, and even from the current levels, within the large cap space, we see an upside of 15-20%. But for the mid cap Persistent System, when we're looking at the larger picture charts, I think the breakout that it has recently played out, it seems quite visible. The Persistent System is headed towards 5,500 to 6,000 levels. So there's a reasonable upside that can be witnessed, and particularly in last 4 sessions, the kind of move that most of these names have witnessed, it definitely indicates that there is some strong buying that has witnessed into it. And largely, the other part, one of the data sets that we were looking into, majority of the FMs, the mutual funds are kind of underweight IT. And imagine if an index which is coming close to the all-time highs and coming near the result season, if any positive tailwind that comes through, and that could actually propel the markets to much higher when we see some upgrades coming in. But largely speaking, yes, there is a reasonable amount of scope for the IT. Even the mid cap IT, we see an upside of 20 to 30% from the current zone.
Manav, we'd have loved to have a longer chat with you, but we're completely out of time. But I cannot not ask you about 2 other notes that you put out. One was on tire and fertilizer. Your top sector picks here between tire and fertilizer, and the timeline that an investor, a medium-term investor, should be looking at to holding these stocks.
Great. So I'll start with the tire as a space. The auto index in past 1.5 to 2 years, have seen one of the best rallies of last 5 years. And this within this space, we have seen sub-sectors within the autos, being in a league of its own. Auto, and we haven't seen even a 50-day test in auto index post October 2023. So it has been last 1.5 years of a very strong rally with mild correction. In fact, tire as a sector, has witnessed an intermediate zone of corrections where the stocks decline over 15%. And comes near a 100-day average. There is an accumulation pattern, and then resumes its uptrend with a larger upswing, which not only exceeds its previous highs, but usually we see a rally of 40% coming from the 100-day average. So this has been the test and the formations of tire stocks. And lately, we've seen how SEAT and Apollo tires, which are our top bets, formed a strong base around 100-day average. And have started to witness an early signal of breakout. So from here, my upside for SEAT is close to the levels of 3,700, which is still 30% from the current levels. And Apollo tires, my upside target is close to 720. So, in general, when the markets are at 24,000 levels, it's very difficult to look for the ideations coming for a very high risk reward. And tire definitely suits that space very well. The other part is on the fertilizer space, which we had already initiated at early stage. But largely, that is a theme that I'm looking for next 6 to 12 months again, where we've given an upside of at least 50 to 100% long on the fertilizer space largely. Pre-election, post-election, very strong accumulation results, accumulation patterns, and the fact that early breakout on the monthly charts, basing out largely is indicating that there is limited downside. And now we have witnessed a small brief correction, and the fertilizer as a space has started to base out for the next leg up. So, these are two sectors from the mid caps which are providing a very high risk reward entry. And within the fertilizer space, my top picks is RCF, NFL, and Chambal Fertilizers.
Got it. Manav, so good talking to you and great calling really on IT, on the Nifty, and we'll watch out for the tire stocks as well. But thanks so much for talking to us today.
Thank you.
That's the view from Manav Chopra of Nuvama. Constructive IT even now, 30% upsides on some of the stocks. But Allied Distillers and heady listing in sight because the subscription was good and the listing discovery price is positive.
It is, and I think also important to note is that not too many listed players in the space, and hence the opportunities are relatively limited, on back of which the response has also been pretty phenomenal for this one. Now, whether or not it gets a big gap up because the broader sentiment on the street is a little quiet this morning is anybody's guess, but yeah, it's 3 seconds to go, and excited listing is what the promoters would have liked. And a check on it. Oh, and it's a 13% up move, largely on expected lines. 12 odd percent, 315 is where the counter has listed. Niraj?
Yep, steady as she goes. Let's see if it perks up during the course of the day or no. But pretty steady listing for this one for sure. Okay, on that note, with the view that while Allied has listed off in the positive, the markets are just about holding out, and some pain at the broader end maybe because the Nifty is quiet and flattish and off the highs of the day. But the mid-cap index, actually mid-caps too are doing that. Select pockets might be down, but otherwise largely the indices are flattish. In fact, off the lows of the day as well for some of them. We call it a day on this leg of India Market Open. Hope you like the show. And stay tuned because a special conversation up next on Talking Point. Kenneth Andrade of Old Bridge joins in. Thanks so much for tuning into Talking Point. I'm your host, Niraj Shah. Our guest today, Kenneth Andrade, founder and CIO, Old Bridge Mutual Fund. Kenneth, such a pleasure talking to you as always. Thanks for taking the time out.
Thanks for having me on the show, Niraj.
The pleasure is entirely mine, as you know it. Kenneth, let me start off by checking with you. How do you feel about the investing landscape currently, considering the fact that we're not cheap, but we are probably one of the few games in town, in addition to maybe South Korea and a few others, which are showing that promise of growth, and the macros